Let's not have... What is that? Fan funding? Oh. Never mind. Keep changing the layout here. Okay, let's see if we can get some good vibes going today. Hey, good morning. Jay Douglas, how's it going? I feel like it's been a while. Morning, Hazel. Yes, sir. Funky Pizza Productions. What would you eat? Funky pizza. It's like Teenage Mutant Ninja Turtles. You like penicillin on your pizza? The greatest lines in movie history right there. And they do like the taps for the pizza. Throw the pizza away. It's so funny. Oh man, classic. Classic, classic, classic. So funny. All right. So let's get going on this. No more jokes. So here's the thing about Fridays is you have max pain. Max pain can be a double-edged sword, as many of us know. Obviously, if it's lower, a lot of times we just get that hedging that happens, and we end up, really they have to hedge either way, money or market makers. So it could be beneficial or it could be really detrimental. If we're not very far away from our max pain target, we typically will see an early day move to max pain, and then we just kind of camp there. That's what it seems like today. In terms of this little micro range, I actually think it looks pretty decent. So to me, what it looks like is that we made a little bit of an M cross here, a jump over a local creek, and then we dropped this trend. So these are... You could use a fib fan if you wanted to. Good morning, Barbara. You could use a fib fan if you wanted to on this bottom, or you can use... Really, there's like a number of ways to do the same thing, but predominantly you would probably look at it as just a simple uptrend, possibly holding. I think about these as like inverse creeks, which if you flip the chart over might make more sense, because you can see the advancement of bears. Specifically, like there's two major sell-offs here. One was on Thursday the 29th. That was right after earnings. And then there's another one on March 8th. So this chart's flipped over. And what I'm looking at is how they're trying to, I'm just talking about bears in general, like sellers, how they're trying to like advance. So it's not, we talk about things like creeks and Wyckoff terminology, and I use Bulkowski charts and all this other stuff. But I know a lot of people, they just want to know like kind of the bare bones, like, well, just explain to me like why that matters, because I guess we could talk about the terminology and go really, really deep if we wanted to, and we will a little bit on here, but we also want to just kind of get to the point, right? And the point is that you have a support and resistance in every range. And in some cases, there's like a secondary one. We'll flip it back over. And that's what this is right here at like 420. So this is commonly referred to as ice in a distribution. The ice, it's not an old school term, it's more of a new school Wyckoffean term. And what the ice is basically like after making a selling or a buying climax, it's kind of like where do we find support or resistance after that? And that tends to be the area where, let's just say that bulls in this case are sort of making their buy-in, right? And you can see it's right here. It's not down at the original selling climax, which isn't really much of a selling climax. And this is part of the reason why I don't feel like this is necessarily the bottom. And I know a lot of people are going to be not happy about that. I talked about it early in the week that this is a distributive top. You don't have to agree that it's going to continue down, but when we look at just the top here, that's what it is. And you know that because you have a pretty weak sell-off followed by a decently heavy buy-in, but it sells off immediately and makes a new low. And that indicates that this is the wall. So you hit a distribution right around $5. We also kind of refuse to close above that level. So that's another indication that that's sort of where you're distributing from. And that's pretty typical for any kind of a range, basic stuff, but it's important. So creeks are really just this kind of invisible barrier. And we talked about EMAs, and I'm on the 1 hour right now. I'm not on the 4 hour. Usually I'm on the 4 hour. And on the 1 hour, the EMAs, at least with extended time on, you can see that we actually broke over the 90 and 180 today. So there is a little bit of strength in this move. However, as you can tell, every time we've come above the 90 and 180, I mean, you can see 1, 2, 3, count this whole time, 4, 5, and now 6. That's typically where we start distribution cycles because, and it makes sense, and obviously, you know, if you go up in time frames, you're going to be hitting those barriers higher. As you can see, all the way up to about 4 hours, you probably haven't even gotten there yet. This becomes kind of the invisible sell-off zone, right? And so the concept of a creek is not a trend line, although sometimes they do form really nice trends. In the case of like a bear or a bull flag, you might see something really obvious. Like I've got the yellow line on the top. It's really simple. It's just drawn from the peak on February 27th through the peak on March 7th. I believe that that's fairly synonymous. It's almost the same as the creek. Now in this case, you can tell like, oh, well, that's where it pushed resistance. Super simple, right? It came up above 5 here, and then it fell back, and then it failed to advance again. So that tells you that that's where you've got the sellers who are clearly trying to like drive the price down, right? And I mentioned in the Discord group, and for some reason, like, I don't know what it was. I think there was just a lot of kind of blanket bullishness. There's nothing wrong with being bullish versus being bearish. It just is a state of what you think is more likely. But there was a lot of bullishness, and I had to make a point that this is where you see the most selling is like at these 2 points. They're both peaks. They're not at the bottom. I mean, you don't see a lot of huge amount of buying at the bottoms. You see most of it at those tops. When you flip the chart upside down, it's kind of obvious why. These are your advancements. And you can see that the sellers, if you flip the chart, again, upside down land, the sellers are making higher lows. And they're trying to advance. Now, what's interesting is that here, at least for now, you have buyers making a higher low. So they're not allowing that quote-unquote ice level, which is where the support has been. They're stopping it, which is good. Stopping power is what you want for a change of character. Hey, good morning. Good morning, guys and gals. Stopping power is what you want for a change of character. And I wasn't seeing a whole lot of stopping power here, and you can say why, because again, like in this case, even though bulls are trying to make advancements, there's a heavy, heavy amount of selling coming off of those tops. Now I'm upside down land again. And you can see why this is clearly, in my opinion, was clearly going in a distributive route, because look at this breakout yesterday. Now, what happened during that breakout yesterday was kind of interesting because it did start sliding. And my comment to the Discord group was just, let's see what bears do. Because typically, if they get to this ice level again, this kind of support resistance level, that's where they're going to have the most problem. We're going to see if the bears can advance beyond that. And I said, I don't know how many times, maybe half a dozen times this week. So if you've been on the Discord group, this is probably the same old, same old. But I said multiple times that 415 was critical. If you break 415, that's where you'll see that big advancement. And an example of that, I mean, they're everywhere. You really can look at any of these previous sell-offs that we've had on AMC. They're all basically exactly the same. Once you get past that kind of level, here it is right here, you typically see that slide ends up being pretty violent, right? So if you get that jump, you get this really nasty slide through what we would call the ice, and then it continues to advance. This is absolutely no different no matter where you look at it on this chart. I mean, it really is the exact same thing over and over and over again. And then there's also this kind of weird fake out inverted head and shoulder that we see pretty frequently as well on AMC. And this is also all over the place. Like there's one really clear one back here in March of 2023. That was a year ago. And you can see that once it kind of advanced, it took a long time in this case. You can see it took a really long time. And in this case, this is a bit different because of how long it took. But the principles are actually the same. Like this is kind of like your ice level right here. And notice what happened when it finally took off is it has what we would call a spring. I'm looking at it, this is upside down, right? It has what we would call like a spring, and then it comes up and advances finally past the ice. It finds support, and that's when you get that massive slide. So because of how long this range was, you have this massive push. In shorter terms, it doesn't usually appear like that violently. It's still violent because it's distribution. Distribution tends to be really volatile, even up to the end. But here's like another example, basically of the same exact thing, where you have a, oh, why my lines are all gone. What am I looking for? Oh yeah, I think I switched it. You have it right here, same thing. It's kind of like this fake out inverted head and shoulder motion. And then as soon as it gets back above that ice level, as we would call it, again, where is the stopping power, right? Where is that contention happening? And in this case, yeah, on the 4 hour, it's really obvious because right here, and even to some degree here, it's right around that EMA. So it makes it pretty easy to see it, I think. And it's a terminology that I don't use very much because we can think about it as sort of like a central pivot point. You can think about it as sort of the center of a motion that's being contested. But in each case, there's the same thing. You get this kind of spring-like action, again, in reverse, and then you advance past the ice. So flip it back upside down, and you can see that that's distributive action. It's like a dip for them, for sellers, but for us, it looks like a UT or a UTAD, an upthrust or an upthrust after distribution. Does that make sense? And then you're looking at that advancement. So what has to happen in order for this to not occur in a distributive setup is that you have to have a stop. You have to have stopping power. You have to stop here at the ice and hold it. And one of the things I've talked about is how there's always this kind of possibility that you kind of come back up, but what has to happen is very difficult because basically what has to occur is that you have to not only advance past that ice level, that has to be held by bulls, but then almost always, if you're going to have a real sustained run, it has to then advance again past whatever creek was lost. And in this case, you can see it didn't even get close. I mean, I'm looking at an example from December of 2022. I know it's a different time for the stock, but the principles are the same, okay? And you'll even note that back in the early days, we should call it, it might seem like, well, this didn't ever, just didn't do the same thing, but it actually did, because right here, we never advanced past that creek again. Like we tried to come back up really long term in August of 2022. I'm talking about that first March, that big March move that was like 160%. And that's what I've been doing a lot of comparisons to. Even in this one, it didn't ever advance back. And you might say, well, what about short term? Didn't it advance? And the answer is, well, not really. Like that's where we got the slingshot. And you can see that after that initial breakdown, in order to have a sustained run, you have to either keep that trend, keep with it, and start a new trend, or you lose it and then it's gone and you're in a distribution. And again, you might say, well, the ice here doesn't seem like really obvious, but I would say it's pretty low in this case, and we were to flip it upside down. I'm looking at March of 2022 right now for those that are listening. And I'm going to flip the chart upside down and just take a look at this in reverse. And you can see that in this case, it's a pretty extreme advancement that had to take place. And this is long term, so you can see it obviously came back below again. But this would be considered like a local upthrust. And then you can see here's the first advancement, and then here's the second advancement right here. And that's when you finally make a new low. So the principles are the same, right? Is that you're trying to, if you're a bear or a bull, you're trying to find liquidity and then make advancements past those levels, okay? Super simple stuff, but it's good to just kind of remind ourselves, because we're going to look at the range right now. And I had a lot of people saying like they didn't understand why I was bearish on the range. And a lot of it has to do with just these early moves. So when you have early moves, sorry, my cat was clawing up my neck. Gosh. When you have these early moves, you have to pay attention to like where that is. So this bothers me, right? That we're kind of knocking at the door on the bottom and that we didn't have a lot of stopping power. Like it seemed like as soon as we came back through here, we immediately, I'm talking about this first drop right after earnings, we immediately made a new low. So that initial stopping power that we had on February 23rd was not enough. Like it wasn't that strong, because it doesn't stop at 430. It goes and makes a new low at 412. And then again, it has a double bottom, which is good, but we failed to make any advancement below, and then, or above, I should say. And then you look at it, of course, I'm looking at it in reverse, so it's kind of upside down land. Did you get my picture here? So this is why I was like really concerned, because once you start dropping then these creeks, and these are kind of bearish creeks where they're trying to advance, you're in big trouble. And normally what we see, and what we have seen in the past, is that once you start dropping these creeks, you make big hooks. My prediction like a week ago or something was that we would come back up and hook. This was about around February 28th or 29th going into March 1st. We did. We made a pretty decent advancement all the way back up to 489, 490, and then we dropped. And as soon as we do that, we create what I would call like an LSPY locally, because you're creating a last point of supply. Very low volume. The volume drops pretty significantly, and just kind of like a bear flag. But here's where the kicker is, right? Is like after that point, what happens next is super important. So the question we want to have answered today probably won't be answered today. And that kind of stinks. But the question we want to have answered today is this a legit breakdown with a reversal? And if that's the case and we close up here in the 450s, are we going to see this thing just take off next week? And if that's the case, right, then how are we going to be able to see that advancement past that upper ice level in reverse, that resistance level at 510? The reason I don't think we're necessarily going to see that today is because if max pain is set around 450, we're probably just going to camp here all day for Friday. That's typical for us on AMC, and it would be very unusual for us to have just a continued advancement on a Friday. Gamma can happen, like gamma ramps, and that's what often causes bigger runs for AMC, as we've seen in the past. But institutions drive those, and if there's an institutional holdup and there's no smart money buy-in, we're probably just going to camp at 450 or right underneath it, if that makes sense. So for a Friday update, that's not very exciting. But what I want to do is kind of, again, I just did that big review on like basic stuff because I want to talk about the big picture. And if this is indeed any kind of a reversal here that holds, and it would have to hold here, you have to understand like it has to hold above like 450 basically. You could see an advancement of the bullish creek. Again, I don't think it's going to happen today. I think it's pretty unlikely, but perhaps next week up here in this little pocket, if this were to hold support and then advance beyond the bullish creek, you get to retest that 180. And if that were to occur, it's around 475. That's the spot where you might have some serious buy-in if there is a composite operator who is bullish and wants to drive the price forward. And if not, then absolutely 100% sure you could advance the creek here, but what's more likely is that if it's still being driven in large part, I'm talking about after this primary action coming down, if it's still being driven in large part by shorts, they're probably just going to redistribute here. This is just going to look like a giant 1, 2, 3, 4 top with, you know, cat ears or some junk, and then it's going to come down. And a lot of folks, again, it's kind of like, why would you think it has to be distributive, Booksy? Well, I don't think it has to be. That's kind of a very silly way to sort of look at any market condition. I do think that probability-wise, again, just based on what we've seen in AMC in the past, it seems likely. However, and I'm going to give you the big however pretty early in this stream. However, the bigger picture is, in my opinion, a lot more bullish. So there is some good news. You might think that it's all bad news and that I'm just kind of bearish, bearish Booksy. But the bigger picture is very promising. So this is a weekly of AMC. And I've made a lot of cases for how we could pretty easily come back down and make a new low. I still don't think that's out of the question. And even though a lot of people are really against this idea that we would have to make a new low or something, I'm not, because if the RSI were to hold up and we make a higher low on RSI, that's kind of a big deal, especially on the weekly or monthly time frames. But specifically, I think the weekly is the one we want to look at. And that's what I'm on right now. If we were to make that divergence on a new low here, I would be very, 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 very bullish. And I'm talking about a big move from up to 7 and then up to 14. I'm not being hyperbolic when I say that. I would genuinely think that that's probably where we could go if we made that spring action. Springs are good. And to prove that, look at what happened in reverse. Look at the up thrusts that have brought us down this low. That's all we see is a massive amount. 1, 2, 3, 4, 5. I mean, 6. I would even count that local one here, even though it was kind of weak. Those up thrusts have driven the price down. So a spring action is not bad. And I think that a lot of people get this concept in their head that if Booksy says he thinks it's going to make a new low, it must be bearish, it must be sliding. No. I don't know where this is coming from, but it's not me. So if you hear people saying that, parroting that, well, he thinks it could go down to low 3s, so he's obviously bearish. No. That's a silly way to look at it, because a spring action right now would be akin to us having that spring action in March. I mean, it's very similar in some ways. When you look at this on the daily, there's almost nowhere that compares to this. I want you to check this out. Look at the RSI on the daily price action, okay? Now, there are places where we see a bounce, and then it slides back through the moving average, and then it just drops, right, like a rock. But never coming from this oversold. And there's only one other place where this kind of happens in the last 2 years, okay? And that place is back in March. Do you see this? And I want you to notice that you can go check the work. You don't have to take my word for it. I'm not telling you to trust me, bro, kind of stuff here. I'm saying just look. Just observe the chart. Find a place where you have this low of an RSI sell-off, right, which was preceded by a bounce in, right? So this is an S-curve down. So you can see up here on November 21st, we had this big S-curve down. There's kind of a middle distribution, and then it bounces down to a new low by about January, February, okay? And that's when the RSI is the most oversold. Then notice what happens. We get this push up. We test, in this case, I think that's the 90 moving average. Oh, it says 30. I'm sorry, because we're on daily and weekly. I had the 30 up because I like to use the 30 for the weekly. So the 30-day moving average, but it's also this really, really critical, what I would call like a cat ear line from like way back. We reject against it. We go down and we make a spring action. Notice what happens on the RSI though. RSI doesn't go lower. It makes a pretty significant divergence. Significant divergence. And also notice that there's a double top here. It looks like an M top, like a cat ear. It looks like it's going to break down, right? And then it drives the price, that RSI below the moving average significantly. It looks like a breakdown, okay? And this happens right around 50, at least on the daily for me, on the RSI, okay? The way I have it set up. So this particular setup does look like on the RSI an inverted head and shoulder action. I mean, you can see it almost self-evidently. I don't really need to point it out, but if you want to see it, there it is, okay? And again, I'm looking at roughly December of 2021, November 2021, all the way through that big March move in 2022. This is not really the way it looks in the price action. So if you're looking at the price action only, it looks like a range that basically has a spring bottom, which is fine. But I find this to be pretty interesting because there's not really any other place I looked, and I couldn't really find another good example where you come that low, except for maybe here, like in January going into February, March of 2023. But even this one's a little bit overdone. You can see it doesn't quite come as low, and then it obviously gets oversold really quickly. This looks very similar to what we're experiencing right now, but on a much larger scale. Why would that matter to somebody like me who looks at pattern analysis? Well, it matters because, and you can see these blocks, because this is, in my opinion, like a pattern expansion of what we've already seen. So it's a super significant point for me because I'm like, oh, well, that would be what I would expect if we're going to have a reaction like what we had in March of 2022. And I've been talking about this since the beginning of the year. I did a big sine wave, and I said I thought we were going to have some kind of a push. I was thinking, and you know, I was wrong. I was thinking that it would come up over here. And then as we moved along, my big fear was, well, what if I'm late, like, or I'm early, really early, and this is just that halfway point, just like we saw back in December of 2021. And you know, I'm not the hugest fan of tracking like just fractals for the sake of fractals, but this is one that for me anyway is really hard to ignore. I find it to be very compelling because there is a very clear expansion. I don't have it on the chart right now, but there's a really clear expansion on a Fibonacci scale of the sine wave that started, I believe, right around that January run-up. And I measured it out, and it's really compelling. I wish I had it pulled up, but I don't have it pulled up. I'm not going to dig around for it because it would take me forever to find it. Suffice to say, this is sort of the section that I'm looking at, roughly from June of 2021 to April of 2022. And I believe that we're experiencing this on like a macro scale as it occurs like that. Now, when I do that, it's almost painful how similar they are. And you might get like really frustrated, like, well, what the heck, Booksy? If that's the way it was the whole time, why didn't we know like early on? Well, I don't know. I had suspicions. I guess it was one of those things where it's a lot easier just to kind of like play it by ear and assume that it's going to be good, not bad. So this middle area would represent what we just went through in October. Oddly similar, yeah, in like timing, but that's not really the most necessary part of it. And what's more curious to me is those RSI bottoms. Because again, it would be one thing to say like, oh, well, I think it's fractally the same. But we know that fractals don't always obey their own rules, especially when it comes to price levels. They can often be really high or really low, and then people try to like fix it and make it look right. I think, though, that this is very, very accurate. I think you have, especially in this area, that big sell-off, long-term cross. It didn't ever make a higher high here, so it was much more bearish on the macro than this initial one, which was that early holding of the level. But what really is significant to me, and I'm going to get rid of this, is what I just said, is basically like we have pretty clear comparison now with RSI that looks really similar. to what we were experiencing right before that March run up. And that's big deal. I would say that arguably, like we may have made that case back here on this November one, and it would have been misleading. So as always, you have to take these things with a grain of salt. But I digress. What happened back in this region is that we eventually made this massive upthrust, about 160%, and we returned back to, we would call it like that ice level. It was a support, but you'll notice it didn't go as low as these dips did. In our case, in the big picture, this is very challenging because the ice level could be either where I have it right now, which is 14. If you remember, 14 was kind of like my original guess, like way back. I thought, oh, we might go to 14 and then you could see something really horrible, like a drop down to 1. I don't think we're going to go to 1. But you could see something like that if it were to mirror out. The reason I said 14, there was a couple reasons, but one of the main reasons was because of this trend right here, that we would come back. And if you draw a line from roughly January 2021 top through the two bottoms, one on May 11th, 2022, the other around December 29th, this line is really critical. And it's clearly like part of that support we dropped through. It almost goes perfectly through that. Almost, not quite, almost goes perfectly through that, I don't know, reverse split date. It's kind of like right on the nose, but not quite. And then this would give you a lot of evidence that, sure, if you had a spring action or even just an LPS here, you could see a push up to the 14s pretty easily. And this would make sense because it would be a back test on a trend that we haven't tested. It's that simple. It also happens to correlate pretty well, you know, with where we see earnings, which is always the case. There's always some kind of correlation to earnings, right? And then also that support level around 14, I don't know what that number is, 1382, which is where we had the breakdown back on September 1st. So does this make sense as a fractal analysis? Yeah. Does this make sense on RSI? Probably. There are some caveats to that. Like one thing I'm concerned about is what if we just stopped at like 7? Another thing is like this 11 level. And I think 7, I know it's weird, but those are the numbers. I think 7 and 11 are probably the bigger hurdles for getting to 14. But I think this is probable, if not likely. And I don't necessarily think it makes no sense either, because if you look again back at 14, this is really close to that original support level. So this is where you would then distribute. And it would probably be a distribution between 11 and 14. It would look like just a massive upthrust in that area to test liquidity. And then we'd have to see what happens when it came back down. If it held around halfway, you could see this reverse and then continue. That would be similar to like what happened on this big backup in January. This is almost a 50% pullback. And then it continued with a reaccumulation versus what happened in March, which is that big sell-off to a new low, where you're trying to get down to a new low and reaccumulate. If you're just doing the expansion of the fractal, you would say, yeah, it's probably going to distribute around 11 to 14, maybe go a little higher, but it's not going to go much farther than that. You get a big sell-off, and then you basically come all the way back down to a new low. If you're really adamant that this is the bottom, and is not going to make another low after even a spring here, if that's possible, it won't possibly make another low, then you'd probably say, no, I think it's going to hold 7. It's going to come back up, reaccumulate at 14. Either way, if the 14 is quote unquote in both scenarios guaranteed, and I'm using air quotes because nothing's guaranteed in the market, then you have a pretty strong case for a buy-in here, right? And it doesn't really matter if it's bearish or bullish afterwards, because you could always exit and then re-enter if you think that it's going to be bullish. And there's going to be time for that if it comes to that. If it were to be bullish here, it's not that complicated. You basically have like a possible 50-50 run here. And I don't think you're necessarily going to come back up above, I think I've said it in the past, like those 50s level, 50 to 60s. I think that a lot of that has to do with what we perceive as what we would call like a bigger M cross, like a jump over a creek and then another jump over a creek and yada, yada, yada. Because you'd have to have a pretty decent M cross here of some kind, right, in order to continue forward. And that's typical because, and we've talked about this a lot, but that's very typical of that pattern that we are expecting to see on AMC. So short term, all right, I'm just going to kind of wrap up my spiel here. Short term, I'm not really bearish or bullish. I'm kind of just waiting to see, because I don't trust this kind of price action on a Friday. I just don't. If we were to close high and then Monday we see an advancement over 475, I'm pretty confident that we could see a push to 5 and possibly even get to, we'd have to see it find support here and then push over this EMA. I think if that happens, we're probably on the move, and it could be really strong, because this could be basically just like a bottom where you made an initial low and then there's a buy-in and then you make a higher low here on the right side of that buy-in. It's essentially like a inverted head and shoulder where the one shoulder is very long, and that would be in order to shake out sellers and then also accumulate. I don't necessarily think it's like that, because again, there's a lot of signals here that show it's still got a lot of volatility. That's more common in a distribution, not an accumulation. But who knows? This stock has been through the ringer. There could be a grand reason for that. And maybe it's going to look like a distribution, you know? There's a guy, newer person in our Discord, who said, well, they're not going to make it obvious. And I'm like, well, yeah, I know. Like, I'm with you on that. I don't ever think that it's going to be obvious when it necessarily turns around, but the breakouts will be obvious. We haven't gotten those yet. I think something like 475 up to 5, and I've been talking about 5 as my confirmation point for a while, because yeah, this could be a UTAD. It's not impossible. This comes up and distributes again, which would stink. But I think it's pretty likely if you make this advancement and we see the buy-ins that we're going to then take off. Does that make sense? But on the short term, that's not a guarantee. And so you have to be mindful that, like, yeah, if this is just for max pain, next week we could see it slide. And there's really no reason why this doesn't come down and attempt to make a new low. It's totally possible that we could end up back down 350 or lower. And that would make some sense in the grand scheme of things because of the creek cross and all that junk, the big one. But on the big picture, is that bearish or bullish? Well, I'm not bearish on the big picture here. I'm just not. Like, I don't think going down to 350 or lower is bad. Some people are going to look at that and say, well, shoot, Booksy's just this big bear. He doesn't ever change his mind. No, I actually think it's pretty likely that would be some kind of a hard spring action, especially if we made a higher RSI here. It's almost the exact same setup we had for that March run. And that was a very significant run, okay? Huge amount of, whether or not you participated in it or not, there was a huge amount of, let's just say mileage, right, on that run. We covered almost the entire drop that we had. So for us, that's a pretty significant run up. I mean, we're talking, let's say, if, for example, if there was a spring from like 330 up to 14, that's 330%. That's huge, huge move. That's not bearish. And even if that doesn't happen, you don't get the drop. Moving from here, if we were to get that significant move, that's still 240%. So neither is bearish, in my opinion. That doesn't mean afterwards we continue. And that's where you're going to have to kind of just, frankly, for me, like, I'm not going to try to guess. I just don't feel like it's wise at this point. I don't know if the short operators are done and they're ready to be done with this stock for now, and the long operators are ready to move it up to a up cycle where you start basically getting reaccumulations, or if we're really not done and there needs to be a lower low. I've said pretty repeatedly at this point that on that 4-hour extended chart, we didn't hit that creek. On this chart, we did. So if you were looking at this on like a daily, and you drew it the same way I drew on the 4-hour, all right, you'll notice that we've already hit it and dropped beneath it. And so it almost works out either way, where that could be where you go find support again. You see where it is? It's way up there. It would have been basically dropped on November 9th. And then that would be significant because it could either provide support, right, maybe after earnings or something, or into earnings in May, or it could provide a sell-off point, right? How can they be that different? Well, they just are, right? If you do the 4-hour and you do that same line on the 4-hour, which is from the 2017 January top, where it first sold off and started a distribution downward, and you go to the top on September 8th, we're above it still, and I've had to pull out that chart repeatedly because it's not possible. You have to like stitch it together basically if you want to see it on the extended hours, at least on my computer screen. It's not big enough. But it's down to around 3 to 330, so it's not quite there yet. So part of me thinks that it's a combination of both. I think usually this is what happens with linear and logarithmic too, is that somebody on linear sees something and then somebody on logarithmic sees something else, they argue about it, and then what happens is that it ends up respecting both in different ways. And I'm going to chalk that up to mathematics being consistent, and then also the fact that these stocks are run by people who are playing algorithms. So the math tends to work out really well, and I don't think it's worth stressing over how you want to draw it. I think the same person that drew this line here could probably then take that same parallel. Like, so for example, if I was doing it on the daily, I'm sure I could take that same parallel and be like, well, I'm going to go to here, and oh, there's a trend, way back in the early days here, coming off this first year, and you can see that it's the same trend. We just touched it, and then if we go down lower and we look at the bottom here, oh, there's another trend that was established in November of 2014, and we double bottomed on it. That's more important, and that's in January. That's before the January run. Well, that's lower, right? That's like down in the 250s. Like that would be more like the one we're talking about where it comes down lower. So I mean, like it almost doesn't matter because you can pretty easily make a case either way that this could have a new low. And that's why I'm not, when people say that like, oh, you're bullish or you're bearish, I'm not really sure I understand what they're saying, because short term, I think this is inconclusive. It's kind of messing with us. You have a bearish move and then you have a bullish move, potentially possible change of character here. But long term, either way, I don't see this as very bearish. I'm still in a pretty bullish situation here, especially on the weekly. So on the weekly, the RSI doesn't really work out. You can't do that comparison to March because obviously it was very different in terms of like on the weekly where this was. It looks really, really similar. That March area looks really similar to where we are now, only on the daily. On the weekly, it looks completely different. But here's the thing, right? Look at what's going on the weekly. On the weekly, it kind of looks like we're finding some kind of a support above, possibly. And this could be distributive. This could be like a double top, right? And that's still going to slide back down, but it's convincingly trying to find support above that moving average. And it's a delayed indicator. It's not a leading indicator, right? So it can't tell you what the future is going to hold, but that's typically pretty strong. Last time we see something like that, for example, in the bigger run-up period, I would say it was probably right here around April of 2020. Now, that was obviously before the larger range formed, so then that makes more of a case for distribution later, where you have a much larger range perhaps formed. And maybe this is an accumulation range, Maybe I get it wrong and it doesn't actually come this low, it stays high, and voila. Why does that look the same? Well, because it is the same. You know what I mean? The fractal is the same. It's just that in one case, you're driving down in a distributive manner. In another case, you're staying high where there's a lot of buy-in, right? And either one, I think, could be what you see in the future long term. So if that were the case and you're just making this kind of much larger push, right, maybe this is what we end up with. And I'm saying maybe a lot because it's really far off. This doesn't make no sense to me though. Like this still makes a lot of sense to me. And this would tell you that, yeah, you get like a January 2025 move. And I've talked about that plenty on this stream, and I already did the big sine wave. I can't do it here anyways, even if I wanted to, because I had to draw it manually. But you can kind of see where that wave is going. Hopefully. Does that make sense? Like, basically it's like this. I don't know. It's kind of hard to draw it, but it's like that. And this one comes down and then back up. I'll do it as briefly as I possibly can. And I think both of these are basically the same fractal, so I mean it makes sense that that would be the case. I don't know, it's something like that. Okay. So the point is that, is this also possible? Well, yeah. So I mean, that's why I feel like right now, for folks that are just looking for the moonshot, I don't necessarily think it's going to happen right now, and that's just kind of where I'm at. Nothing's changed my mind about it yet. I do think that we are likely going to see 14 if we get a big breakout here. I really do. And at the very least, we should see 780 or something like that. So when we look forward, that to me seems the most reasonable. And I think that long term, it also kind of looks like this, and I know that that's a bit bizarre, but if you recall, there was a lot of comparison between those two areas back in March, and they are fractally like the same or very, very similar. And that's because they're both accumulations. It's nothing fancy about that. This area and this area are really, really similar, and then the result is not. But that's because it didn't hold up here. It went through the ice, as we call it, right? It went through that support, that creek. It didn't go through the creek here. So distinctly different. But both are accumulation ranges with a spring. So, I mean, it's not complicated. Just one of them is big and the other one's small. So it would make sense to me that on a micro level, micro meaning like shorter term, maybe on a daily level, we might see that massive upthrust to 14. And then on a huge level, that could look really different on the big picture, where you get a longer term accumulation. Maybe this comes up and rejects, around 50 or something like that, or maybe even lower. And then you end up with this kind of distributive action on RSI. And this ends up being where you get this massive divergence. And that's what you want. You want like a 10-month divergence or something before a big, big run. And that would look really similar to what we experienced here. And this, to me, would be probably the strongest possible, like I would say the most reasonable, outside of just some freakish short squeeze, which I know people are going to argue that's what's going to happen. But outside of that, this would be the most reasonable setup I think that you could possibly consider. And this would get you all the way back up to like the 72 mark, probably. It would look like it comes back to all-time highs. This makes a lot of sense to me long term because of this guy right here. I have to make sure I draw it right. And this is that big M cross that's followed by so you're jumping over a creek, right? Probably this dude, and then it's followed by a secondary push way later that goes up basically another 50%. So you end up with this massive move potentially, right? That's like 2,000% move to like 76 or something, back to all-time highs, quote unquote. This to me makes too much sense. I mean, and I've already made a case for this, so I don't want to sort of sit on that too long. Here, and there's another marker that it hits. You can see the possibilities here seem pretty strong. And the reason this makes a lot of sense to me is because this is how we see typically this formation work out. And I've already talked about this as well, but just to recap for those that may not have caught it, this is really typical for AMC right here. This has happened, I don't know, half a dozen or more times. in the last couple of years, but it's been really significant because this is kind of what we see on the big picture happening. And a lot of it, you can debate it, but almost all of it stays exactly the same in terms of this pattern up until this last push. This last push is the one that either, you can see right here in the big picture on the March run up in 2022, either fails to advance, like right here it failed to advance, and then it ends up going back down, or as in what happened here, and this was still distributive, but what happened in that July 2021 setup going into September 2021, it actually comes up, and this is what I used to call the R1, which is like this big move on the opposite side of this breakdown. It breaks out, and it seems complicated, but it's not. It's pretty simple. You basically have a test of all the necessary creeks here. You have an M cross, and then that final jump, usually, not always, usually is some kind of a sort of like a halfway test, like between these two markers. And it's debatable where that needs to be, but I would say it's probably more or less this support level right here. If that makes sense. So it looks like something that comes out of left field, like, well, that's not necessarily what happens, but I honestly think this is what we're doing on AMC. And I think that in the end, we're either going to come up to this point and reject, or we're going to come up to this point, and that's when you're going to really see fireworks with the stock. This is roughly a 50% marker right here of this cut, and it's the same every time. Like, it works out. I did this same exact diagram like maybe 15 minutes ago right here. And you can do the same diagram back in this area as well right here. And it does the exact same thing. So it doesn't matter where you find it. Look at it like this, and you'll see that's typically where it rejects, because that's the creek. This is the original support line. Makes sense, right? Support was found here. So then that's where you find resistance possibly in the future. So on the big picture, where is that? It's kind of obvious. We hit support for a really long time, starting around December of 2022 in this region. I mean, it's not, in my opinion, it's not subjective. This is pretty straightforward. I think it's fairly objective here. Like, that's it. And then you go back and you look at where is that previously, and that was here. So to me, like, that's the battleground in the future. And that's why I'm not like super concerned about whether or not it drops or goes up right now. And I know that's not what people want to hear. They want to time it right. But honestly, if you're getting shares or you're getting leaps, who cares? Like, it's going to go, eventually, in my opinion. It's just my opinion. And it's based on my due diligence with the stock and a lot of things, like this RSI being super oversold right now. But it doesn't have to be exactly this way. And I know that the timing of these things is always really tricky. And I had done the bigger diagram. I still think that sine wave is probably the more accurate timing, and it's really long term. I don't think it's going to be this immediate move back up to 45 or something. And if it did do that, I honestly don't think that we would continue, because if we were to shoot up right now and rocket to like 52, I think that's probably it. There's not really any there's not really been any accumulation down bottom. I know there's a lot of volume, but I think a lot of that's shorts getting out of their positions from way back, right, in this big massive drop. But I also think that this is a highly debatable breakout of this top line if it just peaked. It'd be much better to have a longer term test and pull back and support and all that jazz up here, in terms of like a case for going higher than, let's say, 42 or 45 or something like that, where that gap is. So that's my opinion on it. I think that on the whole, like, this seems really possible to me. And therefore, like, the smaller term is less important. Now, I've been talking a little bit about the Russell, and I really wanted to address this today. I know that some of you think that this is not relevant to AMC. It totally is. The Russell 2000 is small caps, and Small caps are, if you don't know what that means for some reason, it has to do with market capital, like how high, their market value is, valuation is, and like it's pretty straightforward. The mom and pop store next door to you in your town, it's probably not even traded on the stock market, but if it was, it would be considered a small cap. And your Apple, which makes trillions of dollars or whatever, trades in trillions of dollars, that's large cap, okay? So when we talk about small caps, we are talking about AMC. Like, it is in the Russell index. It's not in like the S&P. IWM is a ETF, and it's designed to be more tradable. It's kind of like SPY because it basically allows you to trade at a lower price. This is 200, and if you were to go to the Russell 2000, it would be like 2020, right? Instead of 202 or whatever it is, okay? Something like that. It's like 10x or something, right? So I'm looking at IWM just because the numbers are more manageable, and I have more vested interest in it anyways because I can't trade the Russell. I don't have enough capital to do that. But I can trade IWM pretty easily. And I've been looking at this possible breakout because if the Fed comes and says, we're going to do interest rate cuts and we're going to do 3 of them this year, that's a big deal. And if they say, well, we're still going to, I don't know why they would say this, but like we're still going to hike interest rates, that's completely different, right? So you have a lot riding on what's coming up this next week, or even just pausing, There's a lot of people talk about stagflation and all this stuff. Even just pausing interest rate hikes or just pausing and not doing anything is significant. So you're going to have, and I remember sorry, I'm kind of rambling a little bit, but I remember March being talked about quite a bit back in the day. And so when I look at March, I'm talking about March of this year, 2024, is I think I remember Powell saying maybe 6 or 7 months ago that they were looking at starting to wind back in March, but they were concerned because of the real estate not really showing any disinflation. And he was saying specifically that you wouldn't see that until, I think, around March, going into summer, and then possibly late 2024. This also is an election year, so there's that to consider as well. There's all kinds of stuff, right? And I'm not a master analysis on this, so I don't want to pretend like I am. But what I can tell you from a technical standpoint is this looks a whole lot like a really long-term accumulation. And if this happens to see a breakout, this is a very significantly long period of time. You're talking about 776 days, so a couple years basically of accumulation potentially. And if this breakout is an SOS, I don't see why you can't see small caps have a pretty massive break to the upside. This is the contrast with SPY, which has already had that bigger move and is just kind of continually moving upward. I know Stockfather and I have talked about it a little bit. He was saying that if you look back at the March run-up, there was this kind of a gnarly pullback. You had a slightly higher high on a weakening RSI. You get this divergence to some degree, but it's kind of weak. And then you end up with the actual like push up with support, and then you take off. And this ends up being, I don't want to say 50%, but I think it's pretty close to 50% of the distance traveled right here. So it is possible that if we're in an SOS that you could get a move that significant, especially considering how long this has been going sideways. Distribution in this case would be equally as devastating to the downside, but that's not what we're seeing. We're seeing it try to break out. So I think if that's the case, we probably are seeing institutions start rotating their positions. Like SPY might get that really long deserved pullback because it's already hit all-time highs, and maybe it wants to come back down and check the previous all-time high. And then you might see that small caps get a turn. I can't guarantee that. I'm just that's me guessing based on what we've seen, and what I'm seeing here on the technical is that maybe they're going to announce interest rate cuts are coming in the future. That doesn't even have to be now. And that could be really, really beneficial for small caps who are having more trouble with the debt, most of them. So this would be really significant, because if this happens to give you that boost, we might just see that's what helps propel AMC finally out of this kind of gutter that it's been in. And again, we can talk about how big of an impact that might have, but I think that it's a pretty significant possible move. I know the PNF that Stockfather had for this was like 220 at least. I think personally that makes a lot of sense because that's center liquidity from in the previous range. So it's about 50% into the previous range before you have any kind of major pullback. So that would be like a singular move. So you'd have like one move up to like roughly 220. And then you'd probably have like a decent pullback or sideways period where you wouldn't necessarily want to hold if you don't have super far out leaps. And then you could see another push up. But I think just based on what we saw previously, and then what's happened with SPY, I don't see why this can't go to a new all-time high up to like 250s. And that's very significant, again, for all small caps, AMC included. So if you're not watching IWM and you're not kind of paying attention to that, I'm not saying you should or shouldn't trade it. I'm just saying, like, if you're not watching that, definitely put that on your watch list, because if this thing can break out here, and it requires quite a bit at this point, it's at like a really critical juncture. I saw the breakdown happening here high up. There was a kind of a wedge going up to 208, 209. It broke down, had a big hook to 206 and dropped. It is a head and shoulder at the top. I believe it's gotten to that target already that it was going to get to, so I don't think there's any further downside for that target. But if it breaks the current trend, you can see it's like sitting right on a previous creek, which comes from way back. It's essentially like one of those fib fans. We pushed resistance way back here, December 27th. That kind of raised the creek. We pushed it again, February 16th, and then we jumped it. Now we're back in that kind of squishy middle, and we're doing a backup. And if it's also, I mean, there's a lot of ands here. It's also the previous top from like 201, which is basically the top of the range. Your auto reaction from like way back was right over there. Preliminary support was there, and supply rather, on this halfway. I mean, there's so much stuff right here. It's almost annoying how much is right in this spot. So you have to imagine this is such an important time, right, for the market on the whole, and especially for small caps. And I really think that if it gets it, you're going to see a big move, like massive move, kind of like what we experienced back here maybe in December. You see a pretty massive move to the upside. That might be what helps AMC kind of get the leverage it needs to jump the creeks and continue to jump. And I'll tell you right now, man, these creek jumps are weak sauce. Weak sauce. Like, they're weird. I don't think we've ever seen anything quite like this with this kind of chop, where it just doesn't quite commit, and there's not that much stopping power. So, like, you're just sliding back and forth between a really important creek. And I don't know if, again, maybe we are going to come down to like 396 in one final sell-off and then break out. Maybe we don't need to come lower than that because there is a support there. We hit support there at February 9th. And maybe that's what we need to finally get this takeoff, is just really check this massive, massively important creek that we have. And this is like the orange line I talked about a lot in previous streams. I don't really see a whole lot of check on it. This looks like we're kind of trading across it and really want to see it check it. I'd be happy with that. I wouldn't really care if we don't come down to new lows now. I still think it's possible it happens way later. Maybe even after all this stuff up top with some kind of a long-term accumulation. Could be way down the line, maybe going into elections even. But I think that would be fine. I just think that this is debatable, and I'm just going to have to wait. So IWM is definitely one I've got on my radar right now for a possibly pretty significant move, and it would be going into April. That coincides with some of the earlier time frame dates that I had. I think I had like March 25th through April 15th. That's where a lot of conjecture was on my part of possibly when we get towards the top. If you're early, it stinks because you probably got burned on, calls this week. I got burned on some. I wasn't able to roll. It happens. But if you're later and you've got some out for April or May, I can't give you financial advice, but if it were me, I would be like sitting tight. Even if they were down a little bit, I would just kind of wait. I would definitely wait till FOMC and see what happens. It's probably going to be pretty volatile. Well, kind of Roadrunner. That's one way to summarize it. It's kind of that's a really broad brush way of saying that, like, oh, well, Booksy doesn't know what he's talking about. But what I'm saying is that right here, we're kind of waiting. And I don't think that today you're going to get an answer. This is short term. I'm on the 4 hour, but it's short term. So like short term, I don't particularly think it matters. Like a spring action would not hurt us short term. And a spring action in our case might just be dropping to like $4. It doesn't have to be super low. What I'm trying to say is that there's a lot of folks that think that when I say we could come down again, they are continually like, he's bearish, he's bearish, he's bearish. I'm not saying that though. I'm saying that short term, $4 or even coming back below 350 here, 355, that's not necessarily bearish. It's short term bearish, very short term. And then long term, I'm very bullish. So that's a mixed bag, you know? So it's not really fair to say like, well, he thinks anything's possible. Of course anything's possible. That's like saying we breathe oxygen. You know what I mean? Like it's the stock market. Anything is possible. You know what I mean? Like, I'm sorry. Stocks have risen and fallen on like Twitter news. You know what I mean? Or on somebody tweeting that they bought a stock. You'd never know. Somebody does, but you don't know. You know, we're retail. We don't know. So I don't want to say like anything's possible. That's like, we live in a world, you know, like just some kind of like blanket obvious statement. I really think that if you want to know what my opinion is, all right, here's what my opinion is. If this manages to hold next Monday at 455, I'm going to be more bullish than bearish. Maybe like 60-40, because I think that if it manages to hold next week, it could be a sign that, much like IWM, we're setting up for that move on the news. But that doesn't come out until FOMC meetings. Typically, that's going to be their Wednesday meeting. There's other stuff that'll be announced Monday and Tuesday. That's what I'm saying is like Monday, Tuesday, you could have like data drops that are volatile to the stock market. And that's why I'm thinking like this could be a local spring action for this range. You see these two bars here going from like 5 down to 415. If this drops here, yeah, it could be distributive, like a redistribution. And it could also just be that that's a setup for Wednesday. And this could be a spring action. And that's why I don't feel like it's not that big of a deal. Like if this comes back down to like 408 or whatever, I think that was the original number we had, because 408, there was a gap and all this other stuff. It comes down to 408, who cares? You know, this could be a spring action that gets you to jump over that creek. That's what you need. And that's what happens in an accumulation. If you want to, here, let's talk about real quick. So here's a redistribution. All right, now this looks a lot like what we're experiencing now, because you've got this automatic reaction and then you've got this kind of ice level here, and there's some pretty clear comparisons that could be drawn, right? You've got the selling climax. You're losing that preliminary, you see that preliminary supply. You see how that ice kind of goes beneath it, right, after those two up thrusts. We don't get the UT though, so that's good. I don't see it there unless that's it, but I really think that what seems more likely is either this is the automatic reaction with support, and then we've got the ice with the UT, and then we basically are just experiencing LSPY, and we're going to go down and reject, which, by the way, look at those angles. It's the same thing. That's no different. You know, you could draw lines right across here and you'd be seeing the same thing that we're talking about. They're walking it down, right? In which case, guess what? If this drop happens, how would you know? How would you know? It's easy. You would come back through the ice. You wouldn't be able to come back through the ice. Does that make sense? So like if you're wondering like, well, how do you know if it's going to go really low versus just like $4? This is it. I'm giving you what I think is a roadmap. And I think it's a good roadmap. And I think that it's a honest roadmap. If this can't come back above the ice here, and it probably, again, you'd probably see another creek right here that's tested. You know, if it can't find support above the ice, if it were to drop, and then we're looking at the future with a lot of scenarios, but then it's going to come down. That's redistribution. Okay, that's telling you that this was another LSPY. They're just bringing the price up in order to what? Absorb buying and then re-enter selling positions. Simple. Maybe you don't feel like it's simple, but it's pretty simple. Like they're basically absorbing the buying in order to get the price up, and then they re-enter short positions to take it down again. So if this is redistribution, that's what you're going to see. And then eventually you're going to come down to those new lows. And I think at that point, you're going to have a really tiny range. This is my opinion. This is why I'm saying I'm long-term, I'm like super bullish on this. I think you're going to have a really small range like down here. And basically you're going to jump this, and essentially you're going to then start a rising accumulation through this pocket of low liquidity. And that's when you would see like this pretty massive takeoff going into the end of April. You see this? So even in a redistribution, I don't necessarily think it does have a long-term sell-off here. I think that this is probable that you just need to get below the bottom, and that this is a real spring action. But in an accumulation, this isn't what happens, right? So if we're going to look at this and say like, oh, well, what about an accumulation? Well, look up an accumulation schematic just to give you some, you know. And there's a couple that are always used, but look up one that has like the spring. This is the classic one that most people will use. 15 more minutes. What's up?
Can we play?
Yeah, maybe. We'll see. We're going to have to eat lunch.
All right.
Okay?
All right.
All right, so in this one, you've got an accumulation. So there's some things that are really similar, and this is why it's difficult to tell, because accumulation looks a lot like redistribution, and distribution looks a lot like reaccumulation. If that made any sense. Like a tongue twister, but that's kind of the way it is. They look pretty similar. So in this case, you have a very similar original move, right? You have that automatic reaction. There is a support. You do come down, right? And you drop to a new low, and that's a support in B. And this is where things are getting kind of dicey, because we look at our current time frame, and you could probably make a case for either one. You know, I could easily make a case to say, well, that's support in B, in which case, guess what? When this thing drops, what do you think happens? Well, maybe, and this is very possible, this is a short-term spring, and it just returns back to the upside, because you're looking at a range here. I'm sorry, messed that up. You're looking at a range here that, and this would have to find support here, but you get the idea. You're looking at a range, upper range here, ignoring the selling climax from back here. You're looking at an upper range here that could just be a reaccumulate or a quick reaccumulation, in which case this could be a local spring dropping beneath 412. Or, and guys, for those of you that are like listening and you're like, I don't really think he's just kind of like, again, he's just saying everything's possible. I'm saying like there are ways to determine that, but you have to pay attention. And right now it's kind of, I think it's obstructed by the fact that earnings happened in the middle of this range, probably right here or right here, depending on how you look at it. Okay. Maybe even here with the upthrust. I think this is the challenge of this range right now. So when I look at this, this could be an upthrust and then a UTAD that's basically about to do this kind of crap. Or it could be that really like this is just a localized bottom. We're going to come back to it later, and we're going to have that localized spring. You could see right where that would be, right around 408. Okay? And then what about the possibility that this is an even bigger range? Well, that's a whole nother thing, but that's another argument for this possibility right here. I mean, it could be much longer winded. I hate this one because you never really know, right? And this is not something that I really advocate for not right now, but I guess it could be possible. I don't think it's as likely. I could see something like that. That'd be a longer term range. Okay, so is it Booksy's fault that redistribution looks a lot like accumulation? No. Like, I can't control that. What I can do is look at volume and say, well, outside of these two selling points, do we have a lot of volatility? The answer is yeah. There's a lot of up and down between the top and bottom of this range. That's typically more distributive. What's also typically distributive is you get up thrust and then longer periods of bottoms. That's kind of what we're seeing here. So it looks, again, a little more distributive. You're seeing that kind of absorption, but then you're not really seeing any strong advancement after that initial push. So it's debatable. Accumulation often ends with a little bit of a whimper. So it might look like, again, we have this, if this is what I'm saying. If I saw on Monday or Tuesday, let's say, for example, let's just say Tuesday going into Wednesday. If I saw this sell-off and I noticed that the volume is significantly lower on coming through the ice, I would be very curious to see what happens next, because if the volume sell-off here is very, very low, that could be more of that whimper, where you're really just seeing the final sellers get out or enter position. And then I would be very curious if we started seeing an advancement, especially if it came back above the ice here at 420. I think you would see a massive reversal imminent. Okay? That's a possibility, but it's also something that you can measure. It's not just me guessing, because I can't tell you exactly what's going to happen, but I can tell you, hey, if this is what I see, if this is what I saw going on next week, and I'm not going to be watching the stock market every single second of every day, that's, to me, a sign of probable accumulation, or at least that this could be a spring action that then propels you back out of the range. And you would probably see that it skips most of the liquidity. So it would skip over like 440. More than likely, as soon as you got that support, if it did happen, let's say at 415, you'd probably jump most of this liquidity pretty fast. You would get stuck right here near the top. This would be your SOS kind of stuff. Again, it has to do with what's been traded already. And typically in an accumulation, you don't spend a lot of time in the markup during the range. You get to the top, you make the SOS, and then you go. Okay. So weak sell-off going into FOMC, followed by a jump back over the ice. That to me would be bullish. Okay. Even if it goes down first, is what I'm saying. Also bullish would be holding, because this could be, again, your LPS scenario, would be holding 450 and advancing to 475. The thing about that is you have to then be careful about redistributing over the 4 hour here. So yeah, once you get up to 5, it's like short-term bullish. Does that make sense? I should put short-term. Short-term bearish is pretty straightforward. It's essentially the exact same situations, but you don't hold support. So you get a sell-off, maybe a stronger sell-off into FOMC, followed by rejection at 415. So this is now resistance. And then short-term bearish is a very weak buy-in to let's say 5 strong sell-off at FOMC, I would say probably would be right there. It's really only 2 scenarios, and you're just going to watch and see what happens. Makes sense? That's my opinion about short-term stuff. Long-term, I just think it's pretty bullish. It doesn't really matter to me if it comes down to the 3s or if it just goes ahead and advances. It just looks right for a pretty decent takeoff to like 14s. So it's kind of a summation. Yeah, everything can be analyzed. I'm reading back in comments. Everything can be analyzed in retrospect a little easier. But I think that's how all statistics are, right? It's like we don't know that a certain outcome is going to happen every time. It's scientific method as well. And not all of life is logical and analytical. It's not. A lot of life is emotional and creative, but we can't predict the emotional stuff as well as we can predict the technical analytical stuff. And prediction is just based on statistical analysis and probability. And I don't know what to tell you except that there's no area of life where it's ever 100% perfect. Like, scientific method is the same way. If you drop an apple off your porch, it's going to fall. Now, you might argue, well, it's going to fall 100% of the time, Booksy. Like, you can never predict whether or not a bird's going to interrupt it and knock it sideways, and maybe it catches on a ledge and it doesn't fall. You know what I mean? Like, so what? So 99.9% of the time it's going to fall. Well, okay, that's gravity, right? It's predictable because of what's happened in the past. So if we look at something like, I don't know, less predictable, like what about a dog? Like, what's the patterns of a dog and how the dog behaves? Because it's more of an animal, right? It's not just... It's something that has almost a sense of free will. I mean, it does. It can do what it wants to do. The dog's not going to necessarily listen to you 100% of the time. We could look at something like that. So scientific method, you would just go through, find the statistics. If I call my dog, how often does it come to me on the first try or the second try or the third try? That's more of a behavior analysis. The market is made up of people, and it's going to be a lot of it just analysis on behaviors, and technical patterns are just probabilities. So for someone to, I guess the reason I always kind of get stuck on that is because a lot of people will say you can't predict it. You can't predict it. There's no sense in trying to predict it. But that's just like saying that you can't predict the apple's going to fall. I think that's silly. Yes, you can. It's repeatable. It's testable. So if we look back at what's been already done on AMC, and that's what I'm making a case for here. You don't have to believe me. It's just one man's opinion, right? I don't think that that's part of it. I think that's subjective, whether somebody believes it or not. But I think when I look at this, I'm trying my best to be analytical, and I'm saying that this is a repeated pattern. That's the whole reason why Bulkowski's methodology is made up of a series of statistics, because he looks at thousands of repeated patterns and then he does an analysis on them. And he says, hey, this has a 51% chance of hitting this marker, or this has a 70% chance of hitting this mark. Those are good odds in the market, 70% versus what? Guessing, which is a 50-50. Maybe not even 50-50 if you're in a downtrend, right? So I find it to be a bit silly. Again, just to kind of say like, and a couple people have said it already on stream, but to say like, well, you just don't know then, is what you're saying. Or you can't possibly predict it, or this or that. Well, yeah, but again, I don't think that that's true. I just disagree. Like we would have a fundamental disagreement about what probability means and why the market could be predictable versus not predictable. And I get it. I think a lot of people are frustrated with the market, and that's where you get this kind of doubt and like, well, I don't think that it is predictable because every time I play it, it doesn't do what I think it's going to do. All right. So what do we do? What do we say then? Either you're not interested in technical analysis or you can't get to the point where it's going to work for you, or you just need to step back and approach it a different way. Or you don't do technical analysis. You do fundamental analysis, maybe with a little bit of technicals mixed in. And you get out of stocks like AMC that have a negative profit margin, because that's what it is, like fundamentally. Fundamentally, this stock is broken. It has more liability than it does assets. And that's not debatable. Like, I had somebody come in the other day and accuse me of being a cesspool or petri dish of negativity towards Adam Aaron and stuff. There's objectively great things that have happened in the last 2 years for AMC's fundamentals. And like from a mathematical standpoint, they are doing better and they have drastically improved overall year over year. There's no debating that. You can go look at the numbers. But the thing is like 40% year over year sounds amazing. Like a 40% increase year over year of profitability. That's amazing. Until you realize that they're still negative. And you're like, oh wait, they're still not profitable. Like they're still losing money every year. Then you think about that 40% and you're like, well, crap. I mean, Adam Aaron's right. It's not enough. My whole thing about the earnings, and I'm not going to talk about this very long, but my whole thing about the earnings was I just thought they didn't need to buffer it with that like every time. It was like they were just reminding everybody that they're still in trouble if they don't fix certain things. Okay, and I thought that was kind of negative sentiment. But I think that's the thing is like, okay, if the stock isn't predictable, if you can't predict it with any kind of technical analysis, and technical analysis is just probability over time, in my opinion, like that's what it boils down to. It's just mathematics, statistics. And then there's emotion thrown into it, right? On top of that, that's the behavioral analysis part of it and stuff dealing with retail versus institutions. Then what are you left with? You're really just left with fundamental analysis. And that's what I don't understand is people who are like, you can't predict this stock, just buy and hold. All right, well then you're just banking on a fundamental analysis because that's all that's left. And if you're trying to tell me that it's about a short squeeze, well, guess what? That's technical analysis. Anything to do with the options chain, gamma ramps, anything to do with the amount of short interest, that's all technical analysis. Like it's all under the same umbrella because you're looking at probability of what happens versus what happened last time versus what happened the last time versus what happened the last time. Like it's pot calling the kettle black. So for people that are just following short interest that think there's a grand thesis of a MOAS, or mother of all short squeezes, that's technical. And Roaring Kitty, deep effing value, that's what he was doing. Like he was basically saying that it had nothing to, or in some ways it had nothing to do with the fundamental value. He was looking at GameStop, which is a company that everybody was expecting to go bankrupt, much like Blockbuster. And he said, well, if you look at the technicals underneath it, there's a big problem, right, that they're not accounting for. Okay. So, like, why are we, I don't know, as a community, AMC people, we're so, like, anti-technical sometimes, and I don't understand that. Like, especially with the original apes. Like, that should be the bread and butter. It should not be fundamental analysis, We've been arguing for 2 years plus that the fundamentals have improved, but the stock price is not. So what are we even doing, We would be looking at this from a technical standpoint. I don't see a fundamental reason why this thing runs to 14. Unless you think that it's just undervalued. But if this company is continually posting losses year over year and they have a deficit in assets versus liability, that's a problem. That's not good. There's no reason why it should be back up at all-time highs. I'm saying long-term, if those fundamentals continue to correct and profitability does return, this could be a massively important technical pattern where you have a possibility of a continuative long-term bullish run. But I'm looking at it from like technical standpoint, like what are we expecting next? I think accumulation is the big thing. That's my argument. I say statistically it's very likely based on what we've seen in the past and this pattern and how it's repeated. So I just find it to be a bit weird to me. Like, I don't know. Maybe there's like disagreement about certain things, but I think that about certain things I said you may not agree with, but like on the whole, like what are we doing then? You know, I don't know. And I feel that way sometimes. I'm like, well, it'd be a lot easier just to buy shares or leaps and just not bother. And I still think that's the case. But there's a way to go about it that I think is right, that's measured. And at the very least, like you're not just playing on emotion. You're not just gambling, assuming that things are going to happen. And it sucks when it doesn't go your way, but that's that. I mean, at least you made an effort, you know. I don't know. I guess if I were a scoffer, I would say that if you didn't make a lot of money on any of this stuff and you were doing technical analysis, that you might as well have just been guessing. And to some degree, I agree. But I also think about hard work, and I think about how very little actually comes easily unless you put in the hard work, and over time you get better. And the thing that differentiates somebody who lost money here but who was studying technical analysis versus somebody who lost money here who was just guessing is the person who was studying has, now they have like a case study that they can look at and they're going to learn from it. The person who was guessing learned nothing from it. Like they just moved on and they lost money and they're just pissed about it and that's it. And that's the hard work aspect. And so I think for people that want things that come easily, like guessing and gambling is kind of like the best solution. We should just gamble because we don't know. So why don't we just try to hit it big? And then when we hit it big, we won't have to do anything else. We won't have to do any more work. Versus somebody who's like, I just want to learn. Even if I make mistakes, I'm going to learn. They're going to have, I think they're putting into their bank, their emotional bank, their psychological bank, their financial bank, eventually, information that's going to benefit them. That's the way I've approached this, even though this has been really crappy. And just to be clear, like I'm not happy with the fact that we've come down this far. Nobody is, I don't think, except for the short sellers. And I've only ever charted this live when it's going down. I was not making billions of dollars and making a bunch of super chats going to the upside. So whether or not you like what I'm doing or not, at least know that that's not been my aim because I don't have a following for that reason. Some people have accused me of that, but you know, we've charted this thing on upside, upside, downside, downside, downside. I mean, like it's been mostly down. So yeah, I'm finishing up. So LSX, just to answer that question, I know I ranted a little bit, but you have, I think there's a strong probability based on the technicals that we come back up to the 14s going into like April. I really do. End of March into April, I think we're likely going to get that bigger move to the upside. We haven't gotten it yet, so it's hard to say we will. And I know that we've already kind of said multiple times we might get it. But at the same time, like, I don't feel like my track record's been that bad. I know people like to say that about everybody on YouTube or whatever, but, you know, I didn't think we were going to advance here. I thought we'd come back to 9. When we got here, I said we might come down to 6. We did come down to 6 and we broke down. It ended up being like a 50% marker. We went way lower. But I got like laughed at both times by different people, especially other figureheads in the AMC community. They were like, we're not doing that. I'm like, okay. You know, I'm not here trying to tell you that it's going to run every time. I really am not. I think there's chances based on every setup. But then you have the probability that, yeah, it doesn't go your way. And you have to watch the volume. That's the analysis part. It's active analysis. You have to watch and see what's happening. If it doesn't make the right advances, it's not going to run. And if it does, it should run. And that's called confirmation. And that is part of technical analysis, is like measuring it and then deciding if it makes the confirmation. So when I look at this and I'm telling you like, hey, I think there's a strong chance that going into the end of April, and I've had it on my chart, you know, for a little bit, that basically this time period, we could be up here at 14s. Like this hasn't changed. even though we've come down and we've made some sideways action. It's not changed. I just don't know locally like how FOMC is going to play it out. And if we need to make that spring action, we're going to make it, you know. Right now, based on what I'm seeing here with this price action, and you can see there's a little bit of a creek that was jumped here. I don't think it's out of the question that this comes back down going into Wednesday of next week, down to like $4. That's why I'm charting it. I feel like it's probable. It's a likely scenario. And it would make sense to me. And while that's happening, we could see some serious volatility on something like the IWM going into Wednesday. And then from that point, if this is a spring action, then the following happens, right? And if it's a distributive action, the following happens. Yeah. That's fine. Like, people, you can trade whatever you want to trade. If you want to trade it and you want to be like apish about it and just buy and hold, you're going to be strapped in if there is a major short squeeze. And it's not going to be a big deal if you didn't follow it every second. That's fine. Like, I don't have any beef against anyone that does that. I think what I was trying to address was like, and you're not counter arguing me or anything. I think what I was trying to address is just that sentiment of why bother, you know? Well, not everybody's the same. And some people are trying to invest long term in a knowledge base, knowledge pool. I'm trying to help with that if I can. From where I can help, right? What I can do, not what I can't do. And I've talked about it pretty openly. Like, there's some things I'm just not very well versed in. So I'm getting better, but I need to learn a lot, you know? Yeah, for me, this is a possible setup for a big spring action going into FOMC, after FOMC. But there's the emotional side of things too, and that's where analysis gets kind of lost. And you can't ignore that. If there's some kind of a news that comes out, and you all already know this, but if there is some kind of news that comes out, there's going to be reaction. And usually the initial reaction is not the reaction, you know. Usually the initial reaction is kind of a inverted reaction. Like almost always when we have FOMC, maybe not this next time, but almost always we have a drop because people are getting out of their put positions. You know what I mean? So you drop the price low, they exit their puts, and then they get out of their selling positions, and then that's it. You know, and then it moves on. There's a dump, kind of a spring action right before the final move, and that's happened repeatedly during the SPY uptrend. So we'll see what happens. I think this one might be a little bit inverted for SPY. I'm not positive, but if they start rotating into small caps, then that's what we'll see. I really do hope that. I really do, because I think it's time for AMC to get a turn. But a lot can happen between now and, I mean, shoot, even just this morning, look at what's already happened, you know. We pushed up, we tested on the 4 hour, we've tested this 90 and dropped it. We're below it again. We went up higher than 450, now we're back below 450. We'll see what happens end of the day, but at least for this creek, it's come back beneath it. There's probably another one right below. Yeah, here I would say you could draw a secondary support, and it's not quite through that yet. You know, anything above maybe 440 today would be pretty strong, or strong-ish. I'm just concerned about this possibility that there's a kind of a distributive top here, and they're really going to just drop again to try to get through that ice. We'll see. Well, all that being said, I do appreciate y'all. I think that you've got a lot to look forward to, hopefully, going into next week. And though I might be sometimes short-term bearish, I'm not bearish on AMC right now. I think we're in a really good spot for a possible big move. And I think we're going to form a pretty huge range going up to 14 possibly after FOMC. So, yeah, whether we hit 4 and turn around or we go down and we get below 350 and turn around, either way, I'm not bearish like right now. I have no real reason to be on the macro. I think it's very bullish. Yeah, I just don't trust this particular price action on a Friday. And that's kind of what I said early on. That's just me recapping. So, yeah, thank you. Thanks for coming out. I don't, and I hope you guys, I get accused sometimes of being a little condescending. That's not my goal. My goal is to make it accessible. There's kind of a difference. So when I talk about stuff that you're like, man, I already know this, just remember, like, there's people out there that don't know that might tune in and be like interested to know why I think certain things, and that's all I'm doing. So it's not me trying to say like, well, you guys don't know what you're talking about. Like, no, I'm just explaining why I think certain things. That's all it is. No judgment. I promise. So yeah, for you guys that are interested, I think Monday I might try to do a stream. If I can, I'll do one on Monday. It would probably be either first thing in the morning or in the afternoon. I do not believe I'm going to be able to stream Tuesday or Wednesday, so that'll be your FOMC days. Maybe Wednesday, but I think it's going to be a bit hard for me to get to it. I don't know. Usually Wednesdays are tough for me. I'm usually working my other job. It just depends what I do on Wednesday. So yeah, we'll see. And then I don't think Thursday or Friday, but I'll try to do at least one update video if I don't after FOMC. So if I don't stream, I'll try to do an update video because it is a very important week for the market. It'll be a very significant Wednesday, Thursday, Friday period, and especially going into the following Monday. So I'll do my best to make a point. Yeah. But otherwise, hope you guys have a great weekend. We'll talk to you later.
Later? Later?